Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 26th of October, 2021. Right, everyone, let's get into it. So, been feeling very bullish over the last few days in particular, I guess like over the last 24 hours, and I know that I'm usually a top signal whenever I tweet anything bullish out, but I kind of said to myself, stuff it, over the last couple of days. I'm going to keep tweeting bullish things out. I don't care. I don't think that I'm actually a top signal, so I kind of put out this tweet today where I basically went through, a bunch of different metrics around Ethereum, and I'll just read them out here. So right now we have 623,000 ETH burned and counting since August 5th, 6th, whatever it was. So less than 3 months. 8 million ETH staked, over $30 billion worth staked, 7.5 million ETH locked in DeFi. I think it's actually higher than this because I don't think DeFi Pulse counts layer 2s right now. We have a 90%, more like an 85% right now, issue introduction coming with the merge. We have layer 2 scaling Ethereum to the world, and we have institutions going along as fuck on ETH. And then I said the path to a 10k ETH and far beyond has never been clearer. Let's go. So I guess I don't have to break down the burning of ETH here and why that's bullish. I've spoken about that a lot before. I spoke about staking yesterday. I think the locked in DeFi I've spoken about before, but what's really interesting about it is the fact that there seems to be a lot of ETH that just sits in DeFi and doesn't really move from it. And I think when I kind of look at my own positions and how I position myself within DeFi, it's pretty much the same for me. I have some ETH that's been in Maker for a very long time. It just sits there whenever I want to draw stablecoins against it because I want to borrow money from myself, essentially. I'll just kind of use that. But, the ETH just pretty much sits there all the time. Even if I paid back most of the debt, I'll just keep the ETH in there. I know maybe I should withdraw it to my own wallet for better security practices, but I just keep it in there. I don't remember the last time I actually paid down all the debt because it's so cheap to borrow from Maker. It's 2% a year. It's ridiculous. And I know it's obviously not very capital efficient because you have to over collateralize, and obviously there's a risk of liquidation. But as I've said before, I keep my liquidation price quite low. But I think that just generally there's a lot of people who just keep ETH just sitting there, and not just within Maker, but with other protocols as well, other money markets, AMMs like Uniswap, stuff like that. And then more just gets added over time as more people want to participate in the Ethereum DeFi economy. And, at both layer 1 and layer 2. So I think that is one of the most bullish things for me, and something that doesn't get really spoken about too much, is the fact that ETH continues to be used as this economic bandwidth for the Ethereum economy in a kind of growing way. And even if it just kind of stalls for a little bit where more ETH isn't being locked up, the most interesting thing is the fact that it's not really going down either. So there really does seem to be a lot of people who are just happy to keep their ETH in these protocols, doing whatever they're doing with it over time. And as I just described, I'm one of those people, but it's cool to see that there's more than just me, of course. And then obviously the issue introduction here that I've talked about before has got to do with the merge. Once the merge goes through, we're going to be getting rid of proof of work block rewards, going to proof of stake block rewards, and they're about, at current values, I think it's about 85% reduction, so not 90% exactly. And if more ETH gets staked before the merge, which I actually expect will be, that issuance reduction will effectively come down even more, so it may only end up being 80% or something like that, which is totally fine because at current fee burn rate, coupled with even if something like 30 million ETH was staked, we would still be net deflationary. I think we're net deflationary up to the tune of 2% right now, which is crazy, negative 2% issuance. So, and if there's 30 million ETH staked, that means there's going to be another 22 million staked. That's a lot of new ETH being staked, and that's just going to push the price up even further. So that's really, really bullish. Layer 2 scaling Ethereum to the world. I've spoken a lot about layer 2s. I'm not going to rehash it all, and there's some other stuff I'm going to talk about later on, but layer 2 is basically keeping users within Ethereum is obviously incredibly bullish overall, and institutions going along on ETH. Now, this isn't something that really gets publicized that much. You won't see it on Twitter a lot of the time. You won't even hear about it, to be honest. But it is happening. From people I've spoken to, from people I've listened to, and just from kind of the patterns that we're seeing play out, it is definitely happening, and I think it's happening in a big way. Raoul Paul has been a very big advocate of ETH being, he called it the greatest trade on the Bankless podcast. He's got a lot of institutional and traditional finance connections. He is definitely getting them to buy ETH, or at least putting it on their radar to kind of look into. So from that point of view, it's kind of easy to draw these conclusions. And, there was a I think this was a kind of like Raul said that basically that institutions, I think it was him or Mark Cuban no, I think it was Raul that was saying that institutions were now skipping BTC and going straight to ETH. And I actually think that a lot of them are going to be buying ETH for staking, because you basically get, as I've described before, not a risk-free, I don't like using the term risk-free, it's like a very, very low risk yield on ETH, and it gives you it gives you both the exposure to ETH as an asset, as a ecosystem, but you also get to kind of like stake that ETH and earn even more over time, which is about 5.4% right now, I think, yield, which is probably going to go to 10+% once the merge happens, because of the unburnt fees going to stakers, which is obviously incredibly bullish there. So all of that leads me to my classic price target, which I've had for a long, long time. Like, I came up with the $10,000 target back in 2019, and I've since said that I think ETH's going far beyond that, to $100,000 and beyond. I don't really have any timelines for these sorts of things. I actually think we can see $10,000 ETH very, very soon. I mean, we're not very far away from that. I wouldn't be surprised to see it by end of this year, early next year, to be honest. But I don't know. I'm not buying ETH with the goal of selling it at $10,000 or whatever, anything like that. And then the $100,000 target that I've given before, I've told you guys that I don't expect that for 5 to 10 years. That's, it's a $10 trillion cap. Around about that, but it's also just about the fact that it takes a lot more money to move ETH the higher the market cap goes. So it's just going to take longer to get to that point. And there will, of course, be drawdowns here. Like, we could go to 10K, right, by end of the year, and then we could dump to 6K again or something like that, or to 5K even, in some kind of like ridiculous sell-off. It could even go lower than that. I don't know. But this is crypto. We love the volatility. We love kind of speculating on these wild price targets. I don't think 10K is wild anymore. It was wild in 2019 when ETH was like $100, $200, when and back then ETH's market cap was like $10-20 billion. Whereas today, its market cap is $500 billion, so doubling to $1 trillion, which is basically a $10,000 ETH, doesn't really seem too far-fetched to me at all. I mean, BTC is already there, and I don't think ETH is far behind. So, yeah, very, very bullish on ETH lately for these kind of like reasons that I mentioned in the tweet, but also for so many other reasons that I've mentioned on the Refuel for months now. And as I've said before, I'm still waiting for someone to give me an actual bear case on ETH as an asset and Ethereum as kind of like a network. Feel free to kind of like reach out to me on Discord or something. That'd be a fun conversation to have. So, final reminder here to update your your ETH2 validators or kind of like consensus layer validators. No matter what validator and node you're running, you need to update them for the Altair fork, which goes live tomorrow. So October 27th at 10:56 a.m. UTC. So if you don't update, you'll be kicked off and basically end up on a minority chain. We don't want that happening. So please, 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 if you haven't updated yet, do it now. This is kind of like the last warning I'm going to give, because by the time the next refuel comes out, I think this may already be live, or at least almost live, so definitely don't dawdle there. But speaking of staking, validators, proof of stake, all that good stuff, Terrence from the Prylabs team put out a tweet saying that we now have 250,000 active validators on the Ethereum proof of stake chain, which is awesome. As I've mentioned before, the more validators we have, the more decentralized the Ethereum network becomes, and then in the future, the more shards we'll be able to have, which means the more scalable Ethereum becomes, which is just like the most awesome thing to me, because you can imagine, like, if we go live today, or not today, sometime in the future, with 64 shards live, and then we have 250,000 validators, but then say that validator number doubles to, because we have 16 million ETH staked, it goes to 500,000. That means we can double the shards. So we can have 128 shards instead of just 64, which means we essentially kind of like give much more data availability capacity to these layer 2s, which allows them to scale even further. It's just so cool how we've been able to kind of flip this scalability trilemma on its head, and essentially get to a point where we get more scale with more decentralization. So just really cool to see that milestone being reached. I think this is this is really only scratching the surface of where we're going to go with staking on Ethereum. 8 million ETH staked is not that much in the grand scheme of things. It's like 6 or 7% of the total supply. I think I went through this on yesterday's Refuel or last week's. I think it was yesterday's actually, where I basically said that, and I was talking about Obel Network, and I was basically saying that I expect so much ETH to be staked, especially through these institutions and these bigger players. It's going to go to 10 million, 20 million, 30 million, 40 million eventually. I just expect not most ETH, but like a lot of ETH to be staked, and That's obviously going to get us more validators. That's going to get us more kind of like capacity to add more shards. That's going to make the network more decentralized. That's going to lock up more ETH, which means that the price should naturally go up over time because there's less ETH available on the market to buy. It's such a symbiotic and beautiful relationship. Like, it really is. When I think about all this stuff, I was actually talking to my friend today, Cooper Turley. He put a tweet out about it that I basically talked to him about the Ethereum protocol, core protocol, and kind of like what's happening there. And, for him, who doesn't pay too much a close attention to the Ethereum core stuff that's going on, because he does a lot of stuff within the Web3 creator economy and the NFT economy, he kind of like wasn't up to speed with it. So I got him up to speed, and he kind of was like, wow, okay, I didn't realize all of this had happened. And that's what a lot of people don't realize. And it's not their fault. They just don't have the time to dedicate to it. This kind of like core protocol stuff moves really quickly. But when you do sit down and you do understand how all of these pieces come together so nicely, and how they actually affect not only the network health itself, but also the health of ETH as an asset, you really start to see that clear vision to $100,000 Ether. That's what I see right now. It's what I've been trying to get all of you to see for many, many months now, and I'm sure a lot of you see it, but I see it so clearly. I can basically picture the next 5 to 10 years in the Ethereum ecosystem. I know it's very hard to kind of like tell what's going to happen within crypto, but I think we've gotten to a point now where I can very clearly see Ethereum's path to world dominance as a network, right? To being the global settlement layer, or to continuing to be a global settlement layer. But also I can see ETH's path to $100,000 and beyond as an asset. And I mean, that is the primary reason why I stack ETH every day and why I buy as much as I can, even at these prices. Like, I kind of like asked myself the question the other day, and did a little bit of a thought experiment. Like, how many people buy, or how many kind of like early investors, people who have bought, I guess like their favorite coin, way earlier. Say their favorite coin has gone like 100x since the first time they bought it. For me, like, I first bought ETH at $10. It means it's gone 400x or over 400x since my first kind of like buy of ETH at $10. How many people who have made that gain on ETH are still buying it, or whatever asset are still buying it? There's not many. I know there's some in the Bitcoin space. There's definitely some in the Ethereum space, but just generally, there's not many people like that. And a lot of people kind of tend to scale out over time, which is fine. Taking profits, there's nothing wrong with that. But for me personally, I can't do it. Like, I cannot bring myself to like take profits in ETH and then sometime down the line regret the fact that I sold some ETH and then it's worth a lot more. And I kind of like gave up a potential validator as well. Like, for me, it's not just stacking ETH, it's also stacking validators. Like, I actually count my ETH stacking as every 32 ETH because it means I can add another validator. And I just love doing that. Not just because I want to earn kind of like a return on my ETH, but also I'm adding to the kind of like health of the network. I'm kind of like adding to the decentralization and security of the network. And I'm actively participating in consensus. And as someone who never did mining, that's a big deal to me. So, maybe I've gone off on a little bit of a tangent here. I tend to do that sometimes, but I guess this goes back to what I was saying earlier about how, like, I'm just so bullish on ETH, and I see it so clearly. I've never seen something so clear in my life, especially after kind of like coming to, I guess, to the point where I fully understood the modular blockchain paradigm, and I was able to basically articulate that in my head and hopefully articulate it to all of you. I just like have this clear kind of like vision in my head, which I don't see changing anytime soon. I feel like it's the culmination of the last 7 or 8 years within Ethereum, kind of like development, research, and all that good stuff there. So yeah, I'm going to move on to a related thing here, actually. A tweet from Kent Barton, which I thought was very interesting today. We basically said, the decision to launch the Beacon chain prior to the shift to proof of stake will go down in crypto history as one of the best designed decisions ever, an ideal blend of testing in prod and iterative progress. By the time the merge happens, this thing will be battle tested and ready to rock. And then he continues by saying, 6 months later, and we've almost completed sound check. Clients are harmonizing nicely. Bugs have been squashed. Game theory tested. The old crypto kills planet narrative due for an abrupt end. So I guess he's pretty much talking about the merge. Like, I think it's going to take a bit more than 6 months, but still, the merge. But what I wanted to focus on, and I wrote about this in the Daily Gwei newsletter today, was the fact that I was just saying, like, it has taken 7 or 8 years of research and development to get Ethereum to where it is today. Not just the ETH, the asset, but Ethereum, the network. Proof of stake and sharding had been talked about since pretty much like early 2014 by Vitalik. That was on the roadmap. It has been on the roadmap. Nothing's changed there. The way we implemented it changed, but not the actual core building block. Layer 2 has been on the roadmap. Arbitrum have been working on, it wasn't called rollups back then, but they have been working on scaling technologies like what they have live today since, I think it was 2014, 2015. So from that perspective, like, the Ethereum ecosystem is not just coming up with these things now. Like, it's not just like over the last few months we've been like, oh no, like we have so much competition from these other kind of like layer 1 chains now, and they're just like cloning everything we do. Let's come up with something to fight them back. Not at all. It's just a bit of a coincidence that this is all happening at once. We've been working on this sort of stuff for a very, very long time. And to Kent's tweet here about the Beacon chain. So the reason why the Beacon chain was launched as a separate network is because Ethereum got really, really big, right? Ethereum is home to millions of users, trillions of dollars a year worth of network activity in terms of like settlement activity, $500 billion network. So could you imagine if we basically said, well, okay, let's just implement the Beacon chain or do the merge essentially on December 1st, 2020. And without battle testing this new consensus mechanism that has never been run in production before, let's just do the merge then, and basically rip out Ethereum's proof of work and put in a new, untested, kind of like unbattle hardened Beacon chain. That wouldn't have worked at all. That would be so risky and such a stupid decision to make back then, and that's exactly why it was opted to launch a separate network. Now, 11 months into the Beacon chain, there's been a few hiccups, been a few bugs. We've squashed them. The Beacon chain has mostly been running really well. We've been able to get 8 million ETH staked, 250,000 validators, and we're pretty much ready for the merge. We just got to build out the merge. I mean, most of the research and speccing has been done. We've got the kind of dev nets that have run. I've talked about the merge a lot lately, so I won't go into it here. But essentially, we're almost there. We're almost at the point where we can finally just like merge these two networks together, and we can have one holistic Ethereum, and then we can focus on what comes after that, which is obviously sharding at the core protocol level, statelessness, a few other bells and whistles, and a few other things on the longer term roadmap. And all the meanwhile, we have the entire layer 2 rollout happening, which didn't just happen overnight. There is many years of research and development that have gone into these things to get us to this point today. So I think when you kind of like take that holistic look of the Ethereum ecosystem as not just something that has basically grown a lot in the last 6 to 12 months, that growth is the culmination of everything that came before it, and it will continue to be into the future. And it's just amazing that we've gotten to gotten it all coming at once here, or at least in the same kind of like release window, which I think is pretty cool. So yeah, I guess like on a related note as well, speaking of scaling, Mihailo put out a tweet today about another impressive milestone for Polygon. They have crossed 1 billion transactions processed on the Polygon POS chain, which is really awesome to see. I don't know what the total transactions processed on the Ethereum mainnet is right now. Maybe I should know this off the top of my head. But I don't know if it's more or less than that. But the funny thing is that when you look at total transactions processed, you kind of have to, I guess, like not do an apples to apples comparison. I think because like with Ethereum, we're obviously, hard limited to the amount of transactions that can be processed based on the gas limit. I think right now we could do 1.3, 1.4 million a day. Or I think it's spiked to like 1.6 million a day. If all of the transactions were like ETH transfers, we could probably go to multiples of that. But as the network is being used today, it's about 1.6, 1.7 million a day. I'm pretty sure the Polygon POS chain can do much more than that, which is the whole point of it. And then the layer 2s can do even more than that in their kind of like final forms. Like the optimistic rollups can do 4,500 TPS in their current form, if kind of like they were I guess like upgraded to that point. And then eventually, eventually I've spoken about this before. There's going to be the chains that can do millions of transactions per second once we have sharding and all that sort of stuff there. So we could get like 1 billion transactions processed in like a day once we have the demand, right? So, I mean, the POS chain has been live for quite a while now, but it's still cool to see them kind of like cross the 1 billion transactions processed mark here. But I mean, again, this is just the beginning. 1 billion is nothing compared to what we're going to see. We're going to see quadrillions of transactions processed kind of like on these networks. And A lot of this is definitely going to come in, maybe in the medium, long-term future, maybe not in the short term, because I still think we're in the early adopter phase. A lot of stuff to work out here. But if we get to a point where there's like 1 million transactions per second, and that's full, say like it's being used and like totally utilized, 1 billion transactions a day is not going to be something that we scoff at. So pretty cool to see this milestone from the Polygon POS chain nonetheless. So a lot of projects seem to be building on Immutable X, which is obviously the NFT layer 2 platform here. The Immutable Twitter account shared a bunch of projects already building on them, such as IMX Punks, College Kids, Orcs, Immutable Apes. So basically a lot of these NFT projects would have either launched on layer 1, which is obviously very expensive, or gone to another network. So now that we have like an option for them to launch on a layer 2 that's dedicated to NFTs and kind of like has much lower gas costs and much faster transactions, and it's just much better for users, then we can do this. So it's great to see projects kind of like choosing to deploy here, even if a lot of these projects are just like these profile picture ones, which we've seen time and time again. But I don't think it really matters too much. Like as I've said before, I don't like moralizing about what people use kind of like these networks for. They can use it for whatever they want. That's the whole point. So I'm not going to say, the fact that like these profile picture NFTs are being launched here is actually not bullish because they're not like innovative NFTs. No, I don't care about any of that. All I care about is getting adoption of the layer 2 ecosystem and making sure that users go to layer 2 rather than going to layer 1, because it's just too expensive for them at layer 1, obviously. So getting them on layer 2 is the goal, and it's great to see Immutable offering this solution for people here. So we now have another bridge protocol. I mean, how many of these are there going to be? There's going to be a lot of them. As I've said to you guys before, bridges are the thing, which I'm going to talk about in a sec from this tweet from Patrick McCorry, who puts it better than I can. But essentially, this new bridge protocol is called a cross protocol, and they're billing themselves as the fastest, cheapest, and most secure L2 to L1 bridge. And they say the bridge allows users to take a short-term loan on L1. This loan is trustlessly guaranteed using transaction insurance. So they're taking a different approach to, I guess, some of the other bridges out there. I think it's an interesting design, and I suggest checking out the blog post for a full breakdown of how it works. But essentially, this is the TLDR. They say here, the way a cross works is that users on L2 send the transaction to an L1 liquidity pool. An insurer on L1 takes the same amount of funds, less a fee, and she sends them to a destination address on L1. Then she submits a request to be reimbursed from the liquidity pool. This opens the 2-hour dispute window. She's the only one liable in this dispute window, and for this, she earns her fee. This is equivalent to someone taking a short-term loan out, but for the end user, the experience is an instant transaction. A cross protocol will be live, audited, and on mainnet on November 8th, which is really, really, really cool. Apparently, 100% of the ownership will also be distributed to the community. That's a first, right? Like, it means that there's going to be potentially a large airdrop or kind of, a distribution in some kind of way to the community. If there is going to be a large airdrop, obviously you want to be farming it on a cross, so definitely keep tabs on this and use it once it's live on mainnet. But I think this is cool. I think, bridges I've spoken about a lot recently, but I think the fact that there's people just still innovating here and using different designs on these bridges is what I'm most excited about, because I don't want every bridge to look the same. I don't want every bridge to just be a cross-chain decentralized exchange or a message relay protocol. I want bridges to innovate with stuff that what a cross is doing here. I want just much more than what we already have, which I think we're going to get. But I think the opportunity right now is growing for teams to be building these sorts of things, because they see the need for it. They see that we are going to basically be in a multi-chain world, whether we like it or not, and that multi-chain world is going to definitely consist of a lot of layer 2s, and there are drawbacks to these layer 2s, like long withdrawal times, and fixing them with different designs, getting to like the quote-unquote like perfect design. We're never going to get to the perfect design of a bridge, but as close as possible to a perfect design is the way to go about it. So I'm really, really excited to see all these experiments playing out here. But on the note of bridges, Patrick McCorry put out a really great tweet where he said, someday we will move away from the phrase layer 2 for new off-chain systems, and we are going to be happier for it. We'll evaluate the bridges, and we'll ask ourselves questions like, do I have custody of my funds? Can the operators freeze my funds? In what way do I trust them? custody and trust is a liability. So this is what I've talked about a lot recently, especially around these bridges, where I basically said that not all bridges are created equal. There are bridges that will keep custody of your funds that are like literally just not even controlled by a multi-sig, controlled by like one address and holding a lot of funds. There are bugs and kind of, I guess, like exploits that could be happening on these bridges. There are multi-sigs that secure some of them. There are bridges that work as like cross-chain decentralized exchanges where you may be taking on liquidity risk and things like that. So the phrase layer 2, I mean, I'm still going to use it. I think for, I guess, like as a marketing term and as a term to kind of like easily explain these things to people, I think it works fine. But in terms of, I guess, like people as like developers and protocol engineers, it makes much more sense not to use the layered terminology and to kind of move to the modular blockchain terminology, which I've obviously spoken about a lot, like consensus security layer, data availability layer, and execution layer. Those things, I mean, we shouldn't expect most end users to ever have to worry about those things, but that's the way that we, as kind of like people, hardcore Ethereum community members, or kind of like people in the community, may talk to each other about these things in that kind of like language. But then the bridges, I think, are important for end users to be aware of as well, because we don't want them using totally centralized bridges and then one day losing all their funds because of it. We want them using the most trustless bridge that we can find for them. And I think that that's where a lot of these kind of like top bridging protocols are barreling towards and making sure that we get there. But it's got to be a journey. And I think that changing terminology takes a while as well. You know, for example, the ETH2 terminology has actually been phased out by the core developers, but a lot of people still use it. I still use it. And consensus and execution layer mean nothing to most people. Doesn't matter how many times I explain it to you guys, a lot of the time it's probably not going to mean much to you. And ETH2 is just like an easier way to describe or refer to these sorts of things, which is fine as well. So yeah, great tweet from Patrick here. Speaking of layer 2s as well, StarkNet put out an update tweet where they said that Argent is coming to StarkNet. So you'll remember that Argent has been working very closely with the ZK Sync team to onboard kind of like their users to ZK Sync, but they're also going to be working with StarkNet now, and other layer 2s as well are coming too. So this is really cool. They apparently have a dedicated StarkNet team already building developer tools. And as StarkNet describes here, Argent is an amazing wallet and OG team, and StarkNet gives boundless computation and account abstraction. So Argent plus StarkNet equals rocket, which, I mean, I agree with. I think if Argent plays their cards right here by supporting all the relevant L2s and making it really easy for users to interact with it, they're going to dominate the wallet space, which I'm pretty excited about, because I really love Argent's wallet, mobile wallet. It's a smart contract wallet. Obviously, maybe not so obviously, but the reason why I didn't take off on layer 1 is because it's very expensive to create a wallet, and they were covering the gas fees, but that's like cost prohibitive for them. So, you know, being able to kind of like create a wallet on L2 and kind of like have a smart contract wallet on L2 is going to be much, much cheaper and much better for the end user as well, allowing them to interact with these sorts of things. So very, very exciting to see that Argent is coming to StarkNet, which, reminder, goes live in an alpha fashion next month on mainnet. So very much looking forward to that. All right, so Perpetual Protocol has a testnet trading competition for Perp V2 live with a total prize pool of $3 million. That is huge, right? For a testnet trading competition. I mean, if I was a trader, I'd want to get a piece of that. So, if you are a trader, if you like trading perpetual assets, if you want to be part of this testnet, definitely go check this out. The game will start today, 26th of October at 1400 UTC, so 2 p.m. UTC. The full rules of the game can be kind of like checked out in this blog post. You can give this a read. It'll be linked in the YouTube description. The payouts will, of course, be in perp tokens. But essentially, I mean, that's a lot of money for kind of participating in this. So definitely go check this out and kind of like check out all the information got to do with it as well. Perp is great. I mean, Perpetual Protocol is great. It's kind of like very similar to, I guess, DYDX in the fact that they trade perpetual contracts, but Perpetual Protocol is currently on XDAI. They're coming to Arbitrum soon as well. So really cool to see more of these protocols kind of out in the wild. So just the final kind of thing here, Trent Van Epps announced that Tim Beiko and Trent will be hosting a merge community call for infrastructure providers in 2 weeks. So this will take place on November 5th on Friday. If you work with wallets, Web3 providers, explorers, and want to better understand how the merge will affect you, you can DM Trent for an invite. So if that applies to any of you, definitely DM Trent. But this is really cool that they're already doing community calls for infrastructure providers, which is obviously critically important because the infrastructure providers need to be on the same page and need to be kind of like ready for when the merge happens in the hopeful near future, right? Q2, I've said Q2 many times before, but it's good to see that they're already working on this. And you remember that Trent did this for EIP 1559 as well. He's been responsible, or at least one of the people responsible for getting a lot of these infrastructure providers to be ready for EIP 1559, and he's still doing it as well. Still trying to get these exchanges on board with it too, and they will be over time. But yeah, cool to see this being hosted here. And if this applies to you, definitely reach out to Trent. But I think on that note, I'm going to end it there for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.